Hi friends, welcome to A to Z Learning channel. Today our video is about mutual funds. It is part of our basic education series where we are picking up mutual fund as a topic. We've all heard about mutual fund delivering great return, but from time to time, many investors have also noticed or their advisors have helped them understand that not all mutual fund schemes are the best investment options. And in this video, we will focus on those laggard, poor performing mutual funds that ET Wealth, which is a supplement that comes on every Monday along with the Economic Times newspaper. ET Wealth, in partnership with the primeinvestor.in study, they did a huge research and applied a very thorough methodology to identify those poor performing funds for us as retail investors. So in this video, all we are trying to do is basically help you understand the study that ET Wealth has done. What are their findings? Which are the fund that they have identified as laggard, poor performing fund? So that as an investor, if you happen to be stuck in one of these funds, then you must take action. So it's an important video. If you are currently invested in mutual fund or you're thinking of investing in mutual fund, please do watch this video. And if you're interested in reading more information about this, I would encourage you to please get hold of ET Wealth supplement for the last week, which was published on October the 11th. That has got a very detailed report in that, and I would encourage you to please read it and inform yourself before you kind of make any investment decision. So without any further delay, let me share with you my summary of observation from this report that ET Wealth primeinvestor.in study has published. Okay, so the first, I think, important thing for you to is the whole focus of this study that ET Wealth primeinvestor.in has done is to help you identify the mutual funds that don't deserve your money. Yes, I repeat, mutual fund investment is sahi hai. You have seen MS Dhoni, you have seen Sachin Tendulkar talk about this in the various advertisement, and I must say that it is a good vehicle for investment which gives you access to good return. It gives you access to the liquidity if you have any emergency to get hold of. So mutual fund is a good investment. I'm not against that as a platform, but when you look at the universe of all the funds that are available for a retail investor to invest, not every fund is performing. And through this research, ET Wealth has helped us identify those laggard, poor performing funds which don't deserve your money. So it's very, very important. So let me first set you the context that how big the problem is of the poor performing mutual fund. If you look at overall, the study found 12 underperforming schemes, and 12 in the context of all the schemes that are available in the market, it may not seem an alarming number. But when you look at the number of assets, the quantum of assets that people have invested in these 12 underperforming schemes, then the number is 2 lakh crores. 2 lakh crores worth of money of investor is stuck, is invested, is lying in these 12 underperforming scheme. So you could be one of those people whose money is already kind of lying in these underperforming scheme. And also to help you understand the context of how big this 2 lakh crore is, the way to see is that all the money that is invested in the mutual fund in India by investors, every 1 rupee out of 5 rupees invested in mutual funds in India, in equity mutual funds in India, that 1 rupee is stuck in these underperforming. So every 1 out of 5 is stuck in these schemes. So it's a large number. It's almost 20%. Precise number is 17.5%. But just to kind of set the context and see how alarming it is, you should see this as like almost 1 out of 5 rupee is stuck in these schemes. So it's very, very important for you to take stock of your funds. If you're already invested, if you're thinking of investing, or your advisor is advising you to invest in these funds, just make sure that you check this list of 12 underperforming and make sure that you're not putting any new money in this as per the study that ET Wealth has done. Why do kind of investor get stuck? I think the most important issue is that the way the numbers are reported in the mutual fund, there's no easy way for a investor like you and I to find out that yes, these are underperforming fund, because these funds may also be giving you positive return, but they're giving you significantly less than what their benchmark is, significantly less than what their peer group is doing. So most of the time, when an investor knows about the problem, they can take action. But because they don't switch, because they are not aware about these things. And the worst performing set of fund that this study has confirmed are basically your tax saving mutual fund, your ELSS schemes. Those are the worst performing. And you know, every February, March, all of you salary guys uh, rush to invest in those tax saving mutual funds to save the tax. And those are the worst performing schemes in the context of overall universe of mutual funds. So I think the key message before I kind of share the names that have come out of this study from ET Wealth, the very important thing, the one action that you have to walk away with is, first of all, if you're thinking of investing in mutual fund for the first time, please do consult an approved financial advisor, a qualified financial advisor, because they will have all this detail and they'll advise you properly. If you're thinking of doing it yourself, make sure that you inform yourself, you read about it, you look at the historical performance, and be watchful and careful. And if you happen to be already invested in the fund that I'll be sharing with you in a minute, as per the ET Wealth study, I would say that use Diwali as your opportunity to clean up. We all use Diwali period to clean up our houses. We get our houses painted, all the dusting, dry cleaning, everything we kind of do so that house looks spanky clean on Diwali day, and we are set for the new year from a Hindu calendar perspective. So use this opportunity to rebalance your portfolio. Most important thing which is working in your favor is that markets have rallied in the recent past. So even these Lagarde poor funds have recovered quite a lot from the level of poor performance they had. So perhaps this is the time when you won't have uh, perhaps this is the time for you to come out of those funds and go into the fund that is more suited to give you better or in line with market returns. So you don't miss this Diwali to clean up. As you clean up your house, please use this opportunity to also clean up your finances, your mutual fund portfolio. So with this in the context, let me kind of share with you what this study has done. So, for example, let me first of all share with you the background and the methodology that they have used. First of all, ET Wealth tied up with the investment research firm called primeinvestor.in to identify schemes that have consistently done poorly and deserve to be dumped now. Using a very thorough and a multi-layered methodology, they have factored in all the possible things, for example, risk adjusted return, volatility, upside and downside capture. And a result of that thorough methodology is that there are 12 largest Lagarde fund that they have identified. I think they are also suggesting that investors holding any of these funds should use the current rally to dump these laggards and move on to something which is better suited to give better returns. If you're not sure about which fund to go, first of all, you must consult your financial advisor. But if you're not sure and you can't get around this day, at least park your money in the index fund. I think that's the kind of least thing you can do instead of staying in this in these Lagarde funds. So the way these Lagarde funds have been identified are, as I said, the 5-point methodology was, first of all, they looked at the outperformance in rolling returns. They looked at information and Sharpe ratio to see the volatility. They also looked at the average 3-year rolling returns. They looked at standard deviation, upside and downside capture to come up with. So the way the study has reported the funds that you need to be watching out are under 4 category: large cap fund category, mid cap fund category, flexi cap fund category, and the tax saving fund category. So when we look at the large cap fund, and all these funds are like at least 10,000 crore or higher. So these are large funds. Aditya Birla SL Frontline Equity Fund, HDFC Top 100 Fund, ICICI Prudential Blue Chip Fund, and Nippon India Large Cap Funds. They all have been identified by the ET Wealth study as the poor performing fund in the large cap space. In the next category of flexi cap, the research identified 2 funds. The first one is the HDFC Flexi Cap Fund, and the second one is the Motilal Oswal Flexi Cap. HDFC FlexiCap has got almost 25,000, over 25,000 crore assets under management, and Motilal also has got over 12,000 crore of assets under management. So again, these are large funds. So there's a good chance if you're already invested in mutual fund, you may be already invested in these funds. So it calls for action on your part. The third category of fund is the mid cap fund. Again, there is a fund from the HDFC house which is called HDFC Mid Cap Opportunities Fund, and the Sundaram Mid Cap Fund. HDFC Mid Cap Opportunity Fund has got over 30,000 crore fund, whereas Sundaram, relatively speaking, smaller, just under 7,000 crore of assets under management. And that takes us to the last and the final category of ELSS or tax saving fund, and this is the worst performing category of mutual funds. Aditya Birla SL Tax Relief 96, which has got over 14,000 crore of assets under management. HDFC Tax Saver, which has got over 9,000 crore assets under management. Nippon India Tax Saver with over 12,000 crore of assets. And the last one is the SBI Long Term Equity, which has got also over 10,000 crore of assets under management. So all these funds are the fund identified as per ET Wealth Prime Investor Study. These are in total 12 mutual funds, and you must use Diwali holiday, Christmas holiday, or the current market rally, whatever is your reason. You must use this opportunity to make sure that you've cleaned your mutual fund portfolio and you've taken out some of these identified poor performing funds. If you're interested in more detail about this, because clearly my video is a quick summary to help you understand, but if you are interested in more detail, then I would encourage you to please get hold of ET Wealth supplement of October 11th through 17th, which was last week's ET Wealth. And that ET Wealth supplement has got this full study with every fund's return, comparison with the benchmark, all kind of set out for you in a very, very easy to understand, easy to follow manner. So I would really encourage you to please read that. So I hope this short video about key mutual funds, the mutual fund that are consistently performing poorly, and ET Wealth, I must thank ET Wealth for carrying out such a detailed work working with primeinvestor.in to enlighten, to bring out in a very easy to manner the simple list of 12 funds that we as a retail investor must avoid, because you don't want to be stuck in a fund that is giving you poor return than the benchmark. When you already have the option of better fund, why stay invested with the fund that are performing poorly? So I hope this short video has been helpful in understanding, and the call for action that we are asking in this video is preparing you to get hold of your portfolio, do something with the portfolio, get hold of this research, and make an informed choice in terms of what you think is right for your investment. So thank you so much for watching our video. Last but not least, if you think we are doing a good job with our videos, then please press the like button and let us know your feedback on our video. And if you've not subscribed our channel A to Z Learning as yet, then I would urge you to please subscribe our channel and become part of our viewers family. Thank you so much for watching our video.